Hello and welcome to yet another edition of Who Moved the Market. I'm Surabhi Upadhyay. It's a brand new week and today we join you with a really interesting story. Now, it's very rare for anybody in the market to complain of corporate governance issues or any corporate sort of governance breaches, so to speak. When it comes to multinational companies, they're usually tightly regulated even in their home markets. They're supposed to have a very clean structure when it comes to communicating with the capital market. However, what's happened today is rather interesting. Actually, this is a development that took place on Friday itself. The company in question is Siemens, and the Siemens stock has fallen around 13 to 14% since this development took place on Friday. So who better than my colleague Vivek to help us understand what's happened here? Vivek, thanks for joining in and welcome to the show as always. This is a first. I mean, you rarely hear of any large global MNCs coming in the crossfire because of a certain decision that they're taking. So let's start with the basics. Siemens wants to sell one of its businesses to its German parent.
That's right.
Is that the crux of the issue?
That's right. So it all started in the dying minutes of trade on Friday.
Yes.
So what actually happened was Siemens India, the listed entity, said that it's going to be selling one business, which is the low voltage motors and geared motors business. Now it's a related party transaction. So it's selling this business to its parent entity, which is Siemens AG. Now, that is where the entire problem has begun. Number one, it's a related party transaction. The valuation at which this particular deal has been done, or the sale consideration, is at 2,200 crore, which when you do a valuation check, it's around 2 times FY22 sales for that particular entity. Okay.
So 2 times sales for this particular entity, which is geared motors and low voltage.
Low voltage motor and geared motors business.
Okay.
Now, what is the rationale the company has given, or do you want to get to that a little later?
No, absolutely. Okay. I think that's a simple question that springs to mind. Why are you selling this business away from the Indian listed entity and moving it to the parent? I mean, investors will ask, right? Is it a high growth business? Is it a really valuable business? Why is it moving away from my kitty here as the Indian shareholder away to the parent?
Absolutely. So the company held a conference call over the weekend and they wanted to explain this along with the results. They wanted to explain this particular transaction to the investors, and like you and me, this was on top of mind of all of the investors. What is the rationale? Why are you doing this? So the company has given a very clear answer to the question.
Okay.
Number one, they believe that the low voltage as well as the geared motor business actually doesn't have very great prospects. Okay. They believe that ordering activity here is quite subdued, and they believe that at best it will go in high single digit, which compared to the rest of the order book is probably underperformed.
It's a low growth business according
to them. Low growth business compared to the rest of the portfolio.
Okay.
Number two, globally, Siemens has been taking all of the businesses, or this particular business, across all of the geographies that they are present in, and they are carving it out into one single entity, which is going to be known as Innovative. Now, what they're going to do with that particular entity is they have 2 options. Number one, they'll go in for an IPO there, where valuations could be a lot higher. Number 2 is they could bring in a long-term strategic business partner with the intention of only running that particular business. So the question that we are asking, and the question on top of everyone's mind is, are the minority shareholders being shortchanged?
Because now what you're describing is that Siemens is taking the same business, this geared motors and low voltage motor business. It's taking it, carving it out from entities, its sort of subsidiaries around different markets around the world.
Right.
And it's consolidating all of this into one company under the parent. And maybe it will look at some strategic options for this business in the future. People will ask, there has to be some value, which is why you're carving it out from all the regional entities and putting it in one global umbrella. And investors will wonder if I'm getting the right bang for my buck.
Absolutely. So there are a couple of things to note. So we spoke about the sales being 2 times FY22 sales for that particular business. So now, when you're comparing the valuation with which Siemens is trading at, and if you do an SOTP valuation, what UBS believes is that this particular business should get 4 times FY25 estimated sales, which
4 times sales.
4 times sales.
They've done this at 2 times sales.
FY22,
and that to FY22, previous year.
So what they are saying is that this particular business should have got a valuation of close to 6,000 crore, whereas what they've got is around 2,200 crore. And I think the market cap today would have wiped off.
Wow, that's a lot. That's a huge gap.
That-
They have valued this at 2,200 crores. UBS believes it should be at 6,000 crores.
Right. See, and valuation difference will always exist. So what has the company done? The transaction itself is quite clean. It's been done by an independent valuation expert. And the company has promised in the conference call that they would be, putting that particular
The
valuation
valuation report.
exercise
Okay.
onto the exchanges.
Okay.
Number two, this particular deal requires the approval of the minority shareholders. Okay.
Okay.
Number three, where do the proceeds of this particular sale go? The company is going to distribute it as a special dividend.
Fair enough, but the
Fair
question is how much will I get in that special dividend,
Yes.
right? I should be getting, proper market value, which right now I think the stock market is not convinced.
Not
With
convinced.
this number of 2,200 crores.
So markets, in my opinion, have two issues. Number one, why do it in the first place?
Yeah.
You've been incubating this business.
Yeah.
You've put in a lot of work here. Valuations have been given, ascribing that this particular business entity is going to see some growth. So as an investor, you're shortchanged, and this happens with global entities. We mentioned at the start that they're typically known for not doing such deals. But names like Siemens, even with Cummins India, there is a perception among some of the smarter folks in the market that the better margin business or the better businesses are actually
Cream is creamed off.
is creamed off. And it's put in the unlisted entity or in the private entities. There are multiple examples, the Unilever's, Colgate, there's always a royalty payment that you do.
Yeah.
And that's always a concern as far as market is
Yeah.
there. And, valuations do get impacted. So this is another clear example that, minority shareholders, despite this being an MNC name, are actually getting shortchanged.
But I think minority shareholders have been very quick to react, and they are, reacting with thumping certainty, if one could say. Look at the stock, even today it's down 10%. There are no buyers rushing to pick up Siemens. Though otherwise, to be fair, the business has been doing well, right? Vivek, I mean, Q4 I think was pretty good for the company. We have discussed these big Vande Bharat, not Vande Bharat, some of the other railway orders, the locomotive orders
Correct.
that they've been getting. So how would you describe the going X of this development that happened on Friday?
So Siemens actually has been at the forefront of markets being very generous in terms of giving valuations to capital good companies. So L&T, Siemens, Cummins, all of these names, you've been highlighting this quite often, that they've been trading near lifetime highs.
Yeah.
And this is simply because of the capex that you're seeing. Now Siemens, in this particular quarter, actually had a one-time order come in, and this was for the locomotive project, or the
Right.
train project. And it was over 25,000 crore. So that one single order was higher than the order book that the company had for all of its other businesses.
Yeah.
So growth prospects are very strong. Company is doing very well. Key segmental revenues when you're looking at energy, smart infra, mobility, digital industries, all of them growing well in excess of double-digit growth. In fact, barring smart infra, all of them have grown more than 30% on a year-on-year basis. So very strong growth. Markets also, it's
And
very
markets
richly
rewarding the stock because of this growth potential that you
Exactly.
speak of, right?
Exactly.
Quite a run. It's what, 60-70% I think in the last 1 year, probably more.
And trades at close to 60 to 70 1 year forwards. If you
60 to
take,
70 times 1 year forward earnings.
we'll have to take off, what's been
The last 2 days of the
market
price
fall.
action.
Absolutely. So that's the issue. If you want, we can actually talk about one more thing. So, UBS actually has said that the low valuation implied for the motors business, what are the concerns? Number one, are you taking into account the right growth metric for this particular business?
Okay.
Profitability and the cash generation. And taking into account all of that, they've come to the figure of 6,000 crore.
Right.
Okay.
Right.
Now, along with that, in the last couple of trading sessions, you've seen other capital goods guys actually get impacted as well. So names like ABB, which do have similar presence.
Similar businesses, yeah.
So now, if the management itself is valuing the business at a lower multiple than what the markets are valuing the business, there are concerns that now market participants are raising.
There'll be a rub-off effect.
With a negative rub-off effect. So that's another thing we should achieve. So shares of ABB today have taken a bit of a knock. Some of the other MNC stocks have corrected a little bit. Honeywell saw a bit of a reaction on Friday, negative reaction. So all of these companies too are now under the radar.
And I guess there's very little scope for error, right? Because as we've discussed, the stocks have run up so much, they've done really well. So, when you're at those lofty levels, 70 times forward earnings, then you can't afford to go wrong,
Can't
right?
afford, yeah, exactly.
So finally, Vivek, what looks like maybe some sort of a tangible way forward? I know we're sort of doing an intelligent guesswork over here, but what could be the way forward? Any other interesting brokerage commentary that you picked up on this?
So, number one, what is Nomura saying? Nomura has downgraded the stock. Concerns arise on the fairness of valuation for the business being sold to the parent.
Okay.
What is Haitong saying? Business carved out from the company, which they have done in the past. There was a healthcare business some time ago, which they divested. That particular business, post-divestment, did very, very well.
Oh, okay.
Which actually...
So you're saying that this is a low growth business, it's not that
Exactly.
great, we're moving it out, and then you realize under the parent, suddenly, it's getting you top dollar valuation and really blooming.
Right. So Nuvama says, this particular sale appears undervalued. Everyone's using the word undervalued.
Undervalued, huh?
Right. And given the fact that corporate governance concerns is something that puts minority shareholders at a disadvantage, given the sale is to the parent entity. So it's not a arm's length
It's not a third party entity to which they're selling. Yeah.
Way forward, I think the company still requires minority shareholder approval. I doubt that they will go ahead and revoke this particular deal because, if it's a global ambition that they have in order to go forward with an IPO with the eventual entity or to bring in a strategic investor, it may not happen. But it'll be interesting to see how this development happens, and markets have been very quick to react, right?
Very quick on this one, absolutely. And that also means that we will have you back more often till this issue sorts itself out, whichever way the minority goes. Either the company sweetens the deal and makes the minority shareholders happy. So we'll have to see how that
another
plays
option,
out.
Yeah.
Market forces your hand, and public markets are pretty strong in India, like we've
They
seen.
could redo the valuation exercise, right?
Yeah, you never know. Public markets have forced a lot of hands, right? Including a lot of the new age companies, the loss-making companies, and now suddenly they're on a very, very different path.
Zomato delivery have actually come back.
Now everybody's talking profits, right? So I guess public markets are a great learning school in India, and that's something to always keep in mind. Thank you very much, Vivek. You have made it simple as always and easy to understand, and we really appreciate it.
Thank you.
All right, folks. So with that, we're out of time on this edition of Who Moved the Market. See you again tomorrow with another interesting theme.